Hello everyone, welcome to Economic Impact. Today is March 11, 2025, and as usual I am with our Chief Economist, Stéfane Marion. Hello Stéfane, a lot of change since the last time.
Good morning, Denis. I guess we're getting closer to the eye of the storm here with economic data that suggests that even the almighty U.S. economy is being impacted by the potential of the tariff war. We saw that for the first time in 2 years, there might be a service economy that shows contraction. And that, Denis, is important because that's 2/3 of the U.S. economy. So if you hit the service sector, which was not so much exposed to the so-called tariff war, but uncertainty has done its job, this bodes for a weaker U.S. economy in the months ahead.
And above that, we have the bond market that are sending us a message now.
Things are in sync now. Remember when we had a discussion a few months ago, the economic data was sometimes so-so, but then now everybody seems to be thinking the same. And from a U.S. bond market perspective, the yield curve, which is the difference between a 10-year Treasury yield and a 3-month T-bill, is now flattening again. So historically, Denis, when you have a flatter or an inverted yield curve, that would suggest weaker growth, not faster growth. So the bond market is clearly getting a little bit more worried.
Yeah, and at the same time, we're seeing different signal on the equity market if you're looking at Europe versus North America.
The equity market rarely inverts. Actually, the beginning of a flattening of the yield curve or potential inversion, and we've seen that things have changed quite significantly since we spoke last month, in the sense that the equity markets are down, way down, particularly in the U.S. Notice too that you might be surprising, but some parts of the world which are threatened by U.S. tariffs, emerging markets, or Europe are actually still up on a year-to-date basis, whereas the U.S. is down significantly. So there seems to be a change in mindset from investors with the uncertainty related to what the global supply chain may look like in the months or years ahead.
And you want to put also in perspective, the external sector, the export in the U.S. versus what people think, really.
Yeah, so there's been some denial in Washington by politicians, but also some economists who were claiming, who cares if there's a tariff war? Exports account for only 11% of the U.S. economy. My answer to that is, fine, that's on the economy, but what about the U.S. financial markets? And what about the S&P 500, where 41% of sales are realized overseas? So if you threaten the tariff war, and you've had a strong U.S. dollar up till recently, then obviously you will threaten the performance of the U.S. stock market, and that's part of the reason of what I showed you before of this underperformance of the U.S. stock market versus other parts of the world.
And talking about that, not all sectors will be affected the same, and the one that will be, we know them very well.
Yeah, and we've all heard about the Magnificent Seven for the past 2 years, generating most of the outperformance of the U.S. stock market. So it's the IT sector, but the IT sector generates 56% of its sales from overseas economy. So imagine that. I'm threatening you with a tariff war. There might be retaliation. What's going to happen to profits of the IT sector in particular? Well, it's not going to go well. And that's fully reflected in what we're seeing. So what we said before, U.S. stock market down 9% from its recent peak, but the NASDAQ, IT sector down almost 14%. And note U.S. banks down more than 16%. Why is that? Well, if you decide that you're going to get a big change in the global supply chain, presumably that will entail also that maybe there'll be less exchanges in U.S. dollars, and 92% of global trade happens in U.S. dollar. If people say, I don't want U.S. dollars under these circumstances, then U.S. banks are under pressure. So again, that does suggest weaker growth in the U.S. in the months ahead.
And because everything are in sync right now, U.S. dollar is going down too.
Yes, so if you have these, if Europe is going up while the U.S. is going down, clearly somebody is shunning the U.S. dollar, and U.S. dollar strength has vanished in the past 4 weeks, and you're already down 4% to 5% year to date. So people are saying, having second doubts about the rationale where the only place to be with Mr. Trump was to invest in the U.S. People say, no, maybe I need to make sure that I have
bigger diversification.
More diversification, geographical diversification might make sense.
Yeah. If we come back in Canada, the external sector did quite well in the last report.
Yeah, so we did well because the U.S. corporations decided with this tariff like we will be importing like there's no tomorrow, and that probably also impacted the U.S. dollar. Whereas in Canada, well, it's the mirror image. If the U.S. were importing quite aggressively, we were exporting quite aggressively. So much so, Denis, that we might have the trade contribution to our economic activity in the first quarter of this year that will be the largest since we came out of COVID. It's almost 5 percentage points. So think about this, Denis. I might be seeing a negative GDP in the U.S. in the first quarter and a positive one in Canada, despite that we are the one threatened by a tariff war.
But that's going to be temporary.
I don't want to be complacent. You're absolutely right. People are trying to front run the impact of the tariffs, so that won't be carried into the second half of this year. So I think that under these circumstances, despite the fact that GDP will be stronger than expected, I think the Bank of Canada has no option but to cut rates at its next meeting, which will be tomorrow, and that on Wednesday, March 12th.
There's two words that we know very well now, tariff and regulation. And when we talk about regulation in Canada, this is something that probably we should tackle right now.
Yeah, so we make a lot of fun about the president claiming that tariff is the most beautiful word in the dictionary. I would say, well, don't laugh too much, because it seems that in Canada, regulation is the most beautiful word in our policymakers' dictionary. They have their own dictionary sometimes, Denis, unfortunately. So the point I'm trying to make here, Denis, is to say, did you know that regulations, we now have 320,000 regulatory requirements that are impacting our corporations. In the manufacturing sector alone, there's 105,000. It's up 40% over the past 2 decades. And what that does, Denis, it limits our job growth, our economic activity, but more importantly, our business investment would be 9% higher were it not for this increase in regulation. So, we have a new prime minister in Ottawa, leader of the Liberal Party. We'll see what happens. But, as you contemplate putting tariffs against the Americans, retaliation, why don't we retaliate by getting rid of this regulation and kickstarting more economic activity in our country by helping our companies? And you know what? That doesn't cost so much for governments to reduce regulation when you think about it. So maybe that's the way to go, or an option for us to consider.
Yeah, and the timing is perfect right now to do that,
You get an opportunity like this once in a generation, so let's seize that opportunity.
Stéfane, what do we do now? You told us to be very careful many months ago. Now, what's the next message?
I admit, Denis, that we told clients to be careful, maybe a little bit too early. But I think at this point in time, before we go in and decide to buy the market more aggressively, let's be prudent. Let's have a balanced portfolio, and maybe start thinking about potential geographical allocation to our diversification to our asset mix. So let's be prudent for the time being. We need to confirm what the new policies will be. And a tariff war, if it continues, it won't be pretty in the second half of the year. There might be more downside to equity markets.
Well, on those not that good word, thank you, Stéfane. Thank you for being with us. Hopefully you're going to be there next month, April. And until then, be safe, be careful, and hopefully things will go better. Thank you.